Good morning, Dr. Seetharaman.
Morning.
We would like to hear the role of banking sector during COVID-19.
Role of banking sector during COVID-19. It has been a huge transformation in terms of the banking role. If you say corporate banking or wholesale banking, whether it includes corporate and commercial banking or structured finance or small and medium-sized entrepreneurs, the liquidity is a major issue, debt servicing capacity is a major issue. So changing the business model, supporting the liquidity, enabling the business houses to stay, business continuity is a major issue. When it comes to retail banking, transaction-based processing are all getting shifted to digital advantage. A huge amount of transgression required from brick and mortar to click. It means mobile banking, GPRS, web banking, again, electronic commerce are all going to be useful enablers for social distancing and also operating through digital advantage. When it comes to investments and treasuries, the market liquidity plays a big role. Currency segmentations, apart from the local currency, how you have a supply chain for foreign currency, how your liquidity is being managed is important. Financial markets are all going through extraordinary set of challenges and changes, and we need to measure and manage to make the most out of it. Technology plays a big role again. Is a huge advantage having a very strong digital support, digital governance. When it comes to international banking, currency risk, counterparty risk and cross-border risk are all most important to measure and manage. So a huge amount of change taking place in terms of the COVID-19 banking reforms.
What is the COVID-19 impact on the wholesale banking?
Wholesale banking, to start with, is going through extraordinary set of changes. Now, for example, the market liquidity has been a stagnation because the social distancing has disrupted the overall business continuity. So we are moving into crisis management. If your business is not running as usual, you will have a fixed expenses, whether administrative cost or operating cost or labor cost, but at the same time the revenues is shrinking. If that is a situation, your liquidity definitely has stake apart from the profitability. So how do we improve the liquidity is a major drive. The government, regulators and the banking system has to enable. So creating liquidity and moving into funding is a major advantage we have to create to see business continuity is on. That's why corporate and commercial banking is playing a big role. When it comes to structure, restructuring of a debt servicing capacity plays a big role. When it comes to small and medium-sized entrepreneurs who are operating with a lean capital, they have to be supported more than ever. So interest refinancing and interest rate reduction, concessional advantage, and making sure some of the utility bills are being paid by the government itself is going to be a value advantage. So tremendous amount of reorganization required in terms of credit creation and also administration of the credit, creating a war room, ensuring business is not suffered as envisaged by the government and the public sector is going to be the major drive.
What is the impact on retail banking, including the private banking and ultra-high net worth wealth management?
Retail banking, all transaction-based processing, whether it is cash deposit or cash withdrawal, checkbook request, ATM card request, or again, point of sales, or even for that matter, electronic commerce, are all going to be playing a major role. The shift between visiting the branch and to omni-channels, whether it is SMS banking or web banking or mobile banking, is very important for us to transfer this conventional transactions into the digital support. And that's what every institution is engaged in. That will also support the social mission of distancing, and overall hygiene factors plays a big role. So essentially, the liquidity has to be created. Again, debt servicing has to be created. The shift has to take place in terms of the overall capacity. Essentially, you also have to administer the high net worth individuals who have got a huge amount of wealth, ultra net worth individuals, how the financial markets can be converted to their advantage, whether it is equities or debt or real estate, how is an opportunity to buy it out at a low cost. Markets are collapsing because of the knee-jerk reaction. But eventually the crisis will get over. We can make the most out of it if you have liquidity in place. And that's what the bank should leverage in real order to support the ultra net worth and private banking customers.
What is the impact on technology from COVID-19?
Technology, of course, it is the backbone of the whole exercise. If you understand the value creation in terms of over the last 20 years, right from internet banking and mobile banking, GPRS, SMS banking, these are advantages today in real order, and the digital shift especially is helping through new tools like artificial intelligence, big data, when it comes to blockchain, treasury or trade, remittance, whole equation changes. So there's a definite need for embracing technology in the shortest possible time and ensuring rationalization comes in terms of the cost factor. So the technology plays a backbone as an engine for the overall economic drive, essentially to make sure we embrace technology and ensure the continuity in real order, including contingency management, local, regional or global terms.
The oil price collapse. What does it mean to oil producing countries and oil price for the year ahead?
Very important questions. Yesterday the oil futures have collapsed and it's below zero. Minus $37 is the oil future for May. Now we have to understand, interpret in the right direction. It doesn't mean the spot price or the other futuristic options are completely under the water. The Gulf states are oil producing economies. 60% of the world oil, 20-25% of the natural gas comes in. Already we have seen the reflection in the Western Texas crude, US crude, what we call it as. It has come down by nearly 77%. Brent has come down by 57%. LNG has come down by 19%. Now these are spot prices. When it comes to supply and demand, because of the lockdown, air traffic and tourism or even road transportation are all now stand still. There's a huge amount of demand containment. Even OPEC has scissored nearly 9.4 million barrels of oil. That's why there is a stagnation in terms of supply, and the supply needs to be stored. So if somebody is not lifting the oil, there is a possibility you will have a glut further and storage cost will be mounting. So whoever is buying out, they have the storage capacity, can stand to benefit in the medium and long term. That's the purpose of the interpretation. So it doesn't mean the oil prices now is going to be negative forever. That's the conception we need to understand. Oil futures will go up. Now with dollar weakening, oil futures will go up, the commodities will go up once the industrial segments coming to terms in terms of production and distributions. Now there is a stagnation, lockdown of many countries. That is why oil price is now production versus consumption, demand versus supply. If you look at it, there is a huge difference, and this differentiation is creating more confusion in terms of the price matrix, and that too for short term. That is only May. If you look at the Brent as well as WTI price for June or July, it's still quoting in north 20s. So we shouldn't underestimate the potential requirements of the emerging market consumption of oil, and we should write off the economic sense of storing oil in the current context and making sure the most out of it in future terms. At the same time, in my opinion, according to IMF, oil price will stabilize in the range of $35 for the current year average, and that's what we should keep in mind when it comes to fiscal management as well as current account, the deficit, if at all, in terms of trade imbalance if it creates. So let's be conscious of the fact. Facts are to be interpreted, not the rumors.
Thank you.
Thank you.